Welcome to the AS Gold Midweek Outlook. Here is your gold analysis for Wednesday the 8th and Thursday the 9th of July. The post-jobs relief rally has paused, and a fresh geopolitical wildcard has emerged in the Strait of Hormuz. First, the snapshot. Spot trades near 4,120 to 4,150, consolidating after the bounce from 3,950 to 4,188. The 4-hour RSI has cooled from 70 to 65. This is a healthy digestion, not a reversal. The week's marquee event is Wednesday's FOMC minutes, and a new safe haven bid has emerged after two tankers were struck in the Strait of Hormuz. Bias is neutral to bullish. The big picture. Gold digests the post-NFP bounce between the 4,114 hammer pivot and the 4,202 cap. RSI unwinding from 70 relieves the overbought pressure. Two forces now dominate. The FOMC minutes on Wednesday, which reveal how hawkish the September hike camp is, and Hormuz, where two tankers were struck on Tuesday, reviving a safe haven bid. Respect the levels and watch for headline-driven volatility. What changed? The post-jobs rally has paused as traders trimmed longs ahead of the FOMC minutes. RSI cooled from 70 to 65, MACD is flattening. But the bigger shift is geopolitical. Two tankers were struck in the Strait of Hormuz on Tuesday, the first direct shipping hits since the ceasefire. The safe haven premium is being repriced back in. Gold now trades a two-sided tape. Geopolitics. The Strait of Hormuz flares again. The Iran war had moved toward de-escalation via a 60-day memorandum signed in June. That truce is now fraying. Two tankers were struck by projectiles on Tuesday. Roughly 20 million barrels a day transit the strait. Any threat to flows reignites the safe haven gold bid. For gold, the net is now tilted bullish, though a quick de-escalation would drain it just as fast. The Fed held rates at 3.50 to 3.75% in June, a unanimous 12-0 decision in Kevin Warsh's first meeting. But the dot plot turned hawkish. The median rose to 3.8%, with 9 of 18 officials seeing at least one more hike. The Wednesday minutes are the key catalyst. Markets want to know how broad the hawkish tilt is against the soft NFP print. Inflation remains sticky. May headline CPI ran 4.2% year-on-year. The June CPI is due the 14th, not a direct catalyst for this session. But the new risk is oil. Renewed Hormuz strikes have firmed crude, threatening to reopen the energy pass-through that had been easing. A complication for a Fed already worried about persistent inflation. The calendar for the 8th and 9th carries two big events. Wednesday, the FOMC minutes at 2 p.m. Eastern, the week's marquee catalyst. Thursday, weekly jobless claims. The prior read was 215,000. A jump would reinforce the cooling jobs narrative. The major inflation test, June CPI, lands the following Monday. Expect elevated two-way volatility. Technically, the short-term trend is up, but pausing above 4,100. The higher time frame is still bearish below the 200-day average at 4,340. The key pivot is the hammer at 4,114. Above it, the bounce is intact. Below it, gold fades toward 4,060 and the 4,000 line. Momentum is cooling. The 4-hour RSI is at 65, down from 70. This relieves overbought pressure and can refresh the setup. MACD is flattening in positive territory. The money flow index is turning lower, consistent with profit-taking. A hold of 4,114 plus a bullish catalyst reopens the upside. Resistance levels. 4,202 is the first cap, the psychological 4,200 pivot. Above that, 4,255, then 4,314. The major structural pivot is the 200-day average at 4,340. The bull extreme projects to 4,441. Support levels. 4,157 has flipped to resistance on the dip. The key must-hold level is the hammer at 4,114. Below that, The bounce base near 4,060, then the 4,000 line at 4,008, and finally the weekly low at 3,952. Projected ranges. Wednesday, the FOMC day, projects a wide range of 4,060 to 4,255. Thursday's range is 4,075 to 4,235. The bull path runs 4,114 to 4,202 to 4,254. The bear path unwinds through 4,114 down to 3,951. Scenario A at 35% is bullish. Further Hormuz strikes or a dovish FOMC nuance. Gold holds 4,114, reclaims 4,157, and tests 4,202, then 4,254. Strategy: buy dips near 4,114. Scenario B at 40%, the primary path, is consolidation. The bounce digests between 4,114 and 4,202. RSI cooling refreshes the setup. A two-way, headline-sensitive tape. Strategy: fade 4,200, buy dips that hold 4,114. Scenario C at 25% is bearish. Hawkish minutes confirmed and a quick Hormuz de-escalation. Loss of 4,114 reopens 4,060, then 4,008 and 3,951. Strategy: sell failure below 4,114. Beneath the noise, structural demand provides a floor. China's PBOC has bought gold for 19 straight months, the longest streak since 2015, lifting reserves to about 2,332 tons. The World Gold Council projects 750 to 850 tons of sovereign buying this year. This is why the 3,900 to 4,000 zone attracted buyers. The bottom line for Wednesday and Thursday. Bias is neutral to bullish. Pivot is 4,114. Above it, bounce intact toward 4,202. Below it, fade toward 4,008. The swing factors are the FOMC minutes tone and the Hormuz headlines. Trade the levels and manage your risk. That is your gold midweek outlook for the 8th and 9th of July. Like, subscribe, and turn on alerts. This is for educational purposes only, not financial advice. Trade safely, and see you in the next one.